I'm wearing glasses because my left eye keeps twitching. All right, we both know why you clicked on this video. It's to learn the strategy that actually made me 20,000 with Top Step, and it's really simple. Before I start the video, I want to clarify that whatever strategy, I can't even talk. Whatever strategy you're using, it works, and the only thing that matters is you managing your risk because the market is either going to go up or down. And I actually really love this clip from Wolf of Wall Street because I just love it and I think you should watch it too. So here's the clip.
Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if a stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
No, Fugazi. It's fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right?
All right? Right.
Yeah. Anyways, this is how my screen usually looks. As you can see, like the areas aren't perfect, but they kind of are because, I mean, it just is, right? It's either gonna bounce or reject off of a level or go through it. It doesn't matter. The point is knowing that these areas exist or zones like this, okay? And actually, before I restart my screen, I want to talk about the trade that I took on Friday. And it was actually this little movement right here. This candle right here made me $700. Not this whole movement. And the lesson I learned from that is you don't need to catch the whole movement in order to make good money. All right, this is my second time recording this. I already had recorded this, but I rewatched it and it wasn't it. So I'm redoing it. I wrote down some notes of what I could do better and I'm going to explain things better this time. All right, so first of all, I'm going to explain my support and resistance zones. And before we start, I want to explain my thinking of these zones, okay? So when we have a zone, normally I color it white. I don't call it support or resistance. I call it an area of interest. And why I do that is because this area of interest, it could be resistance, but it could turn into support eventually. Okay. And it's just always going to be doing that. These zones, even though they get ran through some days, sometimes it gets ran through, it doesn't mean that it's not valid or the zone doesn't work. The thing that I've found with support and resistance is that they're always going to be there. And the only thing that might change is just it might move a little bit. But at the end of the day, like these zones are always going to be important. All right, let me erase this. I'm also going to be trying to do this in one cut because last video I was just saying and like way too much and I had to like cut it out. It wasn't it. All right, but anyways, I start on the 1 hour time frame. Normally, I start on a daily chart just to look at it. If we're close to all-time highs, I do like to label it and I would label it like this. And I just put all-time highs. But that's only if we're like super close to all-time highs or just around it. And then if we're close, like right here, this is a good zone. If we're close to like a 1 hour zone, we're always going to be close to a zone. But I like to keep an eye on the 1 hour chart because, I mean, if it's a bigger time frame, you could expect bigger movements from that area. But I mostly draw my zones on a 15-minute time frame. And what I do sometimes is I just draw them where I see them. because number one, you don't have to be super accurate with these zones. And if you don't want to do that, what I also do, like if I need help drawing zones, for example, FOMC, right? Where would I draw data up here? Like once we get up here, I have to go all the way back here and see, okay, what zones were important, you know? I would do this liquidity down here, this, and there's really not much. But yeah, and then if you're wondering how I draw it on a 15-minute time frame, I put it down close to the body or just around the zone because truly like these zones don't need to be perfect because the market isn't always going to be perfect. But what you need to know is that it's just the area is important. You want to be aware of the area. That's why we draw on our charts just to be aware of those areas. And your zones sometimes are going to be perfect. I'm not going to lie. Like sometimes my zones are perfect and like I don't predict them, the market predicts itself. I just mark it down, you know? Sometimes it's perfect, sometimes it's not. You just have to be aware of the zone. That's the only goal here, you know? But if we look back, see, let's do this, right? We marked this over here. Now let's look back. You could see like a couple weeks ago, we've already like bounced off of these. Oh my gosh, I'm saying like way too much. Jeez. We've already bounced off this area a couple of times already. So we know it's an area of interest. But that's what I like to do on the 15-minute time frame. I just keep it really simple. And let's say that that it was Friday, right? Let's replay this because I actually want to show you guys my thinking on Friday and what I actually did. So on Friday, I had these zones marked down, and I think I had this liquidity down. I'm not sure. It's still a zone. If you think zones are way too close together, also, what I like to do is measure, okay, is it more than 100 ticks? This isn't more than 100 ticks, so I wouldn't even bother having it. Actually, let's not do that right now. I'm gonna do that at the end of the video. But yeah, that's number one. Support and resistance. That's how I draw them. And again, that's how I know if the zones are too close together is if it's over 100 ticks. And the reason for that is, okay, let's measure this really fast. Okay, it's over 100 ticks. So the reason for that is, let's say you're trading, it's your trading time, and you want to take a buy or sell. For example, here, I wouldn't want to sell if a zone was right here because that would only give me, okay, let's put it closer. Like a tight zone like that, it just wouldn't be worth it because it would fuck your risk to reward ratio. So you just want to make sure you could get at least 100 ticks to the other zone, if that makes sense. Hopefully that makes sense. But the whole point of it is just don't have zones that are way too close. if two zones are way too close, then just put it in the middle. You don't need to have zones that are super tight. But yeah, that's what I do for support and resistance. Now, what I do for supply and demand is I look for areas like this. This is a good example. So we have a red candle. I'm pretty sure that's called the basing candle. And then we have this huge movement up. And this is on a 15-minute chart. I did used to label these zones and I used to color them, right? So if it's demand, I would color it green and then I would label, hold on. Okay, so I would have the zone, I would have it colored, and then I would have it labeled like this 15-minute because it's on a 15-minute time frame. But now I don't do that because I just would have way too many white lines. So I just keep it blank. And I'm actually considering having my zones gray because when you have a zone, I don't care if it's supply or demand, the whole point of it is just to be aware of it, right? So we're either going to bounce, before the 50% or we're going to break through. Okay. And this is actually a perfect zone because the 50% line is on this line. That's beautiful. Anyways, if you're wondering my settings for the rectangle tool, it's super simple. Oh, hold on. It's this. I have the middle line and I have the dash line. Background color, I have it super light. And then I extend it all the way to the right. Okay. Now, how I draw them is if we zoom in, I draw it from the body of the candle before the movement starts down to the wick. Everyone draws their zones differently, and all of those ways work. It's all up to you. Okay, it's all up to your experience. You have to experience what you like, what you think is better for yourself. Okay, but personally, I do body the wick. Okay. I forgot to mention that when I'm drawing my supply and demand zones, I start from bigger time frames and move down all the way to the 5-minute time frame. And if I found a zone on like a 1 hour time frame, then I would try zooming in on that zone and seeing if I could shrink it down to a smaller time frame zone. And then what's a valid zone? This is a valid zone. Would a zone, right here be valid? Yes. Would a zone over here be valid? No, because we've already ran through those orders. Okay. So, for example, the other day, I had this zone over here marked up, this supply zone. But I would delete it today because we've already ran through those orders. Okay. At the end of the day, that's what supply and demand is. It's just a bunch of orders in an area. Same with liquidity, you know? It's not going to be a bunch of sellers or buyers all the time. Like for here, this is a good example of that. Um, a lot of people would think, it's definitely going to sell off there. But you have to be aware that it's not always going to be that way. And that's why I like the 50% thing because it's 50-50. So if it goes above the 50% zone, most likely it's going to keep going up. So you just have to react and read what the candles tell you. And I'm actually going to speak on that right now. So on Friday, really quick lesson here. Sidetrack. On Friday, I had my zones marked up and then I also had this liquidity marked up. Let's go, let's skip to 9:30, right? Okay. What the heck? Sorry, I don't use the replay thing very often. Okay, let's go to 9:30, right? So 9:30. Oh, mind you, I have a 15-minute time frame. I trade on the 15-minute time frame and the 5-minute time frame. I look at the 15-minute time frame all of the time and I execute on the 5-minute time frame. So when market opens at 9:30, I'm waiting for the 15-minute candle to form. So I'm waiting for 9:45. That's why I always place a trade at 9:45. Okay. So boom, we have this liquidity marked up here. Normally, I mark up liquidity orange. So I actually had it marked up a little bit like this, orange. I'm always marking down the liquidity that's around me that day. And you're probably wondering, well, why? It's because, a lot of people are either putting their stop loss here or buy orders. You never know. At the end of the day, there's just going to be a bunch of orders at wicks like this. And this is a really good example here. At 9:40, we touched up on the liquidity and the supply zone. Remember, oh shit, I fucked it up. This was a 90-minute supply zone. That's why it's marked, right? We go on the 5-minute. We're waiting for 9:45, but we see that at 9:40, we broke through the 30% and we rejected immediately and we close below the 50% zone. So immediately I'm thinking, okay, we took buy side liquidity. We're most likely going to run down to this other liquidity, at least to this VWAP zone. I know we might touch it. Also, at 9:40, there was a lots of buyers down here or lots of orders. Okay, so at 9:45, right? I saw this wick form. As soon as I saw that wick form, I got in on a sell because I'm expecting the market to short. I put my stop loss right above that wick because if we went above that wick, I was expecting the market to go up. Okay, because it was most likely going to be a fake out. Luckily, I took a sell and I remember I sold around here around 160 ticks because I already had hit my profit goal for the day. And honestly, I wanted to be over with trading for the week. Like, I wanted to be done for the week because it's just been a crazy week. Like, if you traded this past week, like, it's been an insane week. And this small little movement, I believe, was like 400 ticks. Yeah, 400 ticks. And it looks like a small movement, especially on a 5-minute time frame. But markets have just been crazy. Luckily, I got a small piece of the pie and it was just what I needed. And also, I mean, it was a quick ass trade. This was less than 5 minutes. TP hit, boom, done for the day. That's all you need. But that was just an example of, my thought process of getting in a trade. And I get in a trade at 9:45 or after. I never trade before 9:45 because I'm waiting for that first 15-minute candle to form. And if we look at the first 15-minute candle this day, we can see also that it closed below the zone. And then I aimed for VWAP, but obviously I closed before. And then I forgot to mention that on the 5-minute time frame, this could have been a good area to target because it's a demand zone on a 5-minute time frame. You see, let me erase it. Like, let me draw it so you can see. We have the basing candle right here and then a huge movement. Even though, like, normally I would want to see a big movement, it's a good example of where there's a lot of orders. And you can see they all got hit and then we already know what happened afterwards. Market ran up. And let's say, you missed that trade. You missed that trade, right? At 9:45. Well, you could have waited for market to go down to the zone. Okay. So you could have waited. You could have waited how it would react to VWAP. Did it close below VWAP? Did it close above VWAP? It closed above. So personally, I would have waited and see, okay, are we gonna go above this zone? Yes, you could have gotten in on a buy and, boom. It's just it's been an insane crazy market and you got to make decisions quick, but you also have to be aware of all the zones, and that's what I do. I draw zones and I see how the market reacts to it. Also, for my VWAP indicator, it's the only indicator I use. I don't use any other indicator. Right here, it's called volume weighted average price. You could just search VWAP. And for the settings, I have everything off and then I just have it white. That's all. Okay. And I mean, VWAP isn't always going to be accurate, but it's always good to know where VWAP is and how market is reacting to it. Like, for example, before market open, we were rejecting it. And then when market opened, we never closed below it. So that also could have been a good sign. Not only were we not closing above it, but there's also a zone right here, Boom. But personally, I never would have thought to buy just because of the insane sell-off that has happened before the market opened. Okay. But that was just an example of the trade that I took Friday. That was an example of a trade that I would take. Um Yeah, I have notes here and I'm trying to see. Yeah, I talked about liquidity, why it's important. And then I also put the trend is your friend, which I kind of just talked about why I was going for a sell there. Um, yeah, the trend is your friend. Even though like it did break out and buys came in, the sales still popped up. It still popped up right at the time that I needed. Um, Usually, this always doesn't happen, but you never want to trade like against a huge trend, especially during the day. Like, for example, maybe you start trading at 10 o'clock and you can see that like if you drew a trend line, which I rarely draw trend lines just because, like, I don't think they're always accurate, but I think it's good to be aware of certain trends and see if you've broken them. Like, for example, today or yesterday, Friday, was a good example of this. We're going on a downtrend. We broke out of it and we bounced off, you know, in this area where we broke off, if that makes sense. But yeah, the trend is always going to be your friend. Okay, I should rephrase that. The trend is your friend, but not always. Okay, and this was a good example of that. Oh, but what I was gonna say is you wouldn't want to buy or you wouldn't want to sell when you see huge buying pressure. You know what I'm saying? Like, for example, like why would you get in a sell after seeing a huge green candle? You have to have a good reason, like I did right here. I had multiple reasons for going in a sell. The trend, the liquidity, the zone, the candles, the rejection of the 50%. And then not only do you want to know why you're taking a trade, you want to know where you're aiming. Okay, normally I either aim for VWAP or another zone, or almost all the time I aim for like 100 to 200 ticks. Sometimes even 50 if I'm going for like a quick scalp. It really just depends. Um, but yeah, let me see. I put trading time And then I talked about why you would get in. So trading time, for example, me, I trade the same time every single day at 9:45. I never get in a trade before 9:45. Yes, after 9:45, but not like 2 hours after 9:45, you know? If you're trading and you're serious about trading, you need to have a certain time of the day that you know, okay, I'm gonna sit and I'm gonna focus on just trading for 1 or 2 hours and then get on with your day. Don't sit around on the charts and I don't know, mess around. That's not what traders do. That's not what profitable traders do. But yeah, that's really it for my strategy. It's not too crazy, it's not too complicated. If you have any questions, let me know. I am starting a school community focused on people succeeding with prop firms. Currently, I'm working on a prop star course. That's what I'm calling it. And it's just going to be a course focused on the mainly on the mentality needed on succeeding with prop firms cuz I feel like everyone talks about strategy and everyone's asking for how, but nobody's asking like who do you need to become in order to succeed with trading, and that's what I talk about in the course. Obviously I'm going to post videos about it, but I'm focused more on the course for now. If you join, I will start live trading January 1st 2025. The dogs are barking, I don't know if you could hear. But I'm not trading next week because it's Christmas. Markets are going to be iffy. And spend time with your family on Christmas week. Like, it's fucking Christmas. The year's going to be over. And you need to plan for 2025. Get ready for 2025. Because I'm telling you, it's going to be insane. Especially, I heard that after the first year of elections, like after what am I saying? The year after the year of elections, it's I forgot where I heard it from, but they said that the year after elections is like the craziest best year to trade, and that's 2025. So I just know everyone knows 2025 is going to be crazy, especially with the markets. But yeah, if you want to join the school community, I'm going to be live trading. I'm going to be doing weekly calls. I'm going to be doing one-on-ones with people who join for free. So yeah, that's pretty much it. If you have any questions, comment below. If you want me to do a certain video, let me know. But I hope you learned something and thank you for watching.